Well, hello, everyone. How's it going? Awesome to have you here as always. And we are just going to get really started. Hugh, I see that you're here, so that is good. Excellent. Thanks for waving. Atlanta is ready for you, my friend. So we'll be getting into that in just a moment. And yeah, so thanks for joining. I will, excuse me, I'll share my screen. One moment.
Hey, Jennifer, while you're getting ready to share your screen, I just wanted to jump on here and just say it is so good to see everybody. And, it's the dog days of summer. It's funny, we're all trying to squeeze a little bit more out of summer in the last couple of weeks, and I keep running into this. At the same time, I have found, I had a guy who made meat pies in a store give me real estate advice while he was renting, waiting for the bottom of the market to fall out. I went to get my beard trimmed. Do you like the way my beard looks? I had it trimmed, and the dude at the barber shop, he was like, yo, man, you got to get into real estate. Everybody talks about it, but very few people do. And if it's the end of August and you're showing up on this call, guess what? You are ready to jump in, and you are a person that wants to actually take action. So welcome. Looking forward to hanging out with you and helping solve problems for you and move the needle.
Wonderful.
Jennifer, back to you.
Well, Naran, thank you. So Naran is our Chief Leadership Officer, for those of you who don't know, but many of you do. And he's going to be popping in and out a little bit today with various punctuations, let's call it that. So for those of you, I won't go through this, you're here, you're Real Estate Wealth Lab members. We're so delighted and grateful. And here's what we're going through. This is your legal disclaimer. We're not providing you advice. We're providing forward-looking information. But this is not in, you still have to do your own diligence. There you go. But we are, as you can see up top, some buy signals, hold signals, sell signals, avoid signals. Watch closely and watch this. And we're going to be going through a lot of that today. And of course, as per usual, we've got our do's and don'ts and our chat rules. So ask questions, say hello, like Vanessa did from Calgary, aloha, engage and share your feedback, your thoughts, your ideas. Of course, be respectful and kind. I know all of you will. And don't solicit, please. That's really the key item there. So thank you. Housekeeping, this is being recorded and it will be available in your Rule member portal. So you have access to this. And as a result, I may be going through things a little bit more quickly today because it's a very interesting presentation. There's not a lot has changed since last month. So I won't go through but all of the data is there. So that's where we're at. This is our agenda for today, going through that market data for Canada and the US at that macro level, what's going on in the politics. And I've had requests from members, thank you, Dwayne, and others who have asked me to look into a couple of topics, and one of them being population. And so I'm going to do a little bit of a deeper dive on that. And then our market analysis is for Atlanta, Georgia, based on Hugh raising his hand and saying, hey, this is the market research I want. So thank you. This is interactive. This is all about you and the markets that you're looking at. So join us for our Rule Live events. Please come on out. September 14th is going to be very special. I'll go over that in a moment. Save these dates. And, I'll tell you in a second. So September 14th, please come out. Carmen and John are just outstanding individuals with a wealth of experience with regard to mortgages, and they also have funds and all kinds of different projects to look at as well. But on the September 14th, we'll be primarily talking about mortgages. But if you haven't heard of Pro Funds, if you haven't heard of Carmen and her team, you definitely want to. I've been working with her since 2010, and she has definitely gotten some great mortgages for me. So by demand, thank you all for coming out to the community labs this summer and designing what you want. And so we've done it. The very first, by your request, you've asked for it, our first casual Rule Lounge. So this is where we get to hang out together, chit chat, get to know each other, have some tea, have some tequila, have some coffee, whatever it is, it's your jam, but it'll just be very casual. So you can save the date for Fridays. This will start September 23rd. So Fridays at 7:30 p.m. That's Eastern, and 4:30 Pacific. And we've also designed, as you've requested, masterminds. So again, thank you so much for everyone who's contributed. We've gotten lots of feedback, even through emails, for those of you who couldn't make it to our community lab last week. And we have now designed masterminds on the first and third Wednesday. So our community labs will be masterminds. We're going to start these up on September 21st, and we'll do a 6-person cap. So you will be getting an email, I believe, right, Paige? An email with a form. That's it. You can register for the various oh, look, okay, so that's the market leaders link, but in the future, you'll be getting an email so that you can sign up for which topic you want your mastermind to be. So we're starting with property management, life by design, a la international real estate investing, and multifamily. Cool, so way to go, everyone. Thank you. Oh, and here's the other topics, by the way. So we ranked them, we didn't, you guys ranked them, and so you'll have more of that, but I just wanted to show you all the list of topics, and there's more. So if you have topics that you want your masterminds to cover, you can absolutely do that. So from our research lab then, are we good to go? Is everybody buckled up? Right on, some thumbs up. Thank you, thank you. Okay, well, here is your monthly macro information for the business cycle. So by the way, the real estate cycle is just a business cycle of real estate, just like any other business cycle. It goes through expansion, stabilization, and contractions. And there are definitely, I mean, we look at 30 some on indicators when we're looking at a market and where it is in its real estate cycle. And there are do's and don'ts at certain timing. So for example, who here wants to buy at the ultimate high? Probably not. No, if you can, you want to buy it when it's a little softer. However, as I always say, and many investors do say this also, is that it's really important to stay in the market. This is a long haul, unless of course you're doing flips and things like that, that's more important for your timing. But I will be sharing with you this and also where we are in our real estate cycle for Atlanta later on. So as we look at all of our 30 indicators, here's the conclusion, and it has not changed. We are going to experience a softening for this year, for the back half of 2022, and through 2023 and 2024. And but over the long haul, you can see the long haul into a decade or so, we are expecting slow, modest growth. So this is a great opportunity for you to get into the market as it's softening, but definitely hold on to your properties. So there you go. That's the conclusion. So again, a little bit about me is that I do like to study the media, and I like to study research, and I alert you to fake news. And we've got a little bit of that today, a little bit. Some great kind of wild headlines out there. So getting into GDP for both the US and Canada. You can see here on this slide that it's still being revised down. So that's not good. We definitely, GDP is a leading economic indicator that forecasts our real estate in the long term. The US real GDP growth has actually gone down quite a bit. They're now forecasting 1.8 for 2022, 1.2 for 2023. And you can see Canada is actually downgraded from 3.4 this year to 1.5 next year. So you'll want to and will want to watch this closely. But the good news is that it's still growth. It's still projected to be growth. So, and I've got some really other great news in just a moment. So hold, buy, hang in there. We've heard lots about recessions. Yes, we've also heard that they're changing the definition of a recession of 2 quarters of GDP decline. So we'll watch that a little bit more closely as well. But again, a lot of headlines are overstating some things, let's put it that way. So from this particular viewpoint, the economists predict a mild recession, and for Canada, what that's going to look like. So these include the variables that they're looking at is real estate, jobless claims, and impacts, of course, of government imposed restrictions in response to the pandemic. And so they're saying that this will lead to GDP growth of less than 1%. And I'm just going to scooch back here. So this was from CIBC, and they were showing a 3.4% growth, whereas RBC is showing a 1%. So where is that actually going to land? And that's where we need to be watching this really closely. However, from BMO, like there's, again, some grains of salt here, as BMO, and he's a great economist, he says there are various shades of recession from gray to dark black. The market consensus is that it will be mild. And again, I went back to that recession definition of 2 quarters of growth, of low growth, pardon me, no growth. There we are. But we are expecting that contraction. And we're expecting over the long run that we will be going in a steady direction in the right way. Of course, I can change it anytime, which is why you come out, hang out with me and the rest of the Rule team here. So we love that. But then there's some interesting things that are going on. And the economic, this is from JP Morgan, and they put out a weekly update, which is great. And they're showing that personal consumption is this is in the US, I'm talking about the US right now. The personal consumption is 2/3 of the US GDP, which is quite different. Whereas in Canada, Canada's GDP is primarily like 20% made up of the housing market. So very different activity in the US market. So we want to be watching personal consumption. And we started out 2022 with US households having a ton of money, lots of savings, about 2.5 trillion. And then what we're seeing is that this is starting to the buffer that they had in savings is starting to erode. And the reason that that is the case is that, or how they're able to measure it, is that consumers are saving less and they're using their credit cards for purchases more. So that's something that we want to look into. However, on this slide, you can see that core inflation. Okay, so here's what we're saying is core inflation. I'm going to talk about that in a minute. It's gone down, but it is not. We'll talk about inflation later. So that's a little bit of a relief, but it is still very high, and there's no quick fix to inflation. So I will talk about that. But it's not. We're not in the clear from that. And what we're seeing, though, a little bit of a positive sign, is look at that consumer sentiment down in August. So it was previously at 51.5, and it's now at 55.1. Consumer confidence matters. It is actually an indicator in our real estate cycle formula, 100%. And so when we start to see the confidence boost, then there's more spending, there's more demand, that means more jobs, and these all help facilitate economic activity, GDP, and of course, they put upward pressure on our rents and real estate markets. So this is a good sign. We're going to be tracking that indicator closely. And back to the US still here, they're expecting a soft landing, hope for, the US economy. So there's that little bit of optimism that's seeping back into the US stock market, but that's just the market in general. And there's more economists as well as investors that are suggesting that there may be an ability to avoid that severe downturn as it copes with inflation. So again, as BMO was saying, BMO was saying in terms of there's all these different kinds of shades of recession, and that's where we want to be monitoring it. How intense could it be? And I've got some good news. So here's where we're tracking on GDP, kind of, but it's still growth. That's good news. Thumbs up. So now we're scooching over here to jobs, and there's I think I'll just kind of skip over it. Well, no. Okay. So what we do need to talk about with jobs, though, is that inflation, and yes, I'll talk about inflation in detail, but inflation typically results in lower employment. So we have a situation here, because inflation is going up, we will see an impact on jobs, and that's not good for anything in terms of recessions. However, what we're seeing is some really positive, not in Canada, some really positive news in the US. So in Canada, this isn't very good. July actually had minus 31,000 jobs. So we lost jobs. And the market experts expected 15,000 jobs. So that's a big delta of the expectation was 15,000 positive, all the way down to negative 31. So not even, that's when we look at the net data, that's not good. Now, that said, 1 month, 2 months, okay, let's watch this closely. Unemployment, though, is doing really well. It's at 4.9. Participation rate slightly down. It's not bad at all. And the wages are up. So overall, when you start to take all of the data into consideration, the jobs market isn't terrible in Canada, but we do want to watch that employment factor very, very closely. Again, these are hold signals right now. This isn't about like running out of the market. These things take time to walk through and work through. So for example, like their GDP and the jobs data won't be impacting our rents or real estate prices for about another, well, a year to 2 years for the rents, 1 year, 2 years down the road for the real estate prices. So because we still have growth in the GDP, we're actually in a good stead. And then when it comes to July in the US, check out these numbers. Who here wants to invest in US real estate? Pretty much everyone. I know, we've heard you. That's definitely an intriguing market, and this jobs is incredible. They increased, it's up 528,000 jobs in the US in July alone. Holy cow. All right, and the unemployment is down at another historical low. So it's gone down even further, hitting a new record, and the long-term unemployment is declining. So all of these are extremely good signs, and and then there's also productivity is improving. So these are all positive. Everything's positive, positive, positive for the US for jobs activity. And if you'll recall, their productivity was not doing so great at 7.3 last month. Oops, pardon me, I didn't mean to click. And now it's at 4.6%. So now what we're seeing is that we've got good jobs, lots of jobs, and they're being productive. All good news. So from there, we've got the US jobs growing, it's jumping, etc. And like I said, you remember with Canada, and it was like, hey, they expected 15,000, but actually lost 31,000. That's not like what we were expecting, but whereas in the US, it's actually stronger than expectations. And these are always good signs. And so even despite the recession fears, that's a lot of jobs. That's a lot. So we need to manage these headlines, like I suggested earlier, of is it going to be, that deep? Or like we said, little different shades of gray of different kinds of recessions. So there could be some challenges, but it's looking very, very promising at this time. So jobs for Canada, not so great, but we'll watch that closely. And the US, massive job growth. Now, people, this is, we're going to talk a little bit about demographics, and a number of you have asked me to get into this at a deeper level. So I hope that this lands really well for you. At least that's my intention. So bear with me. But so the Fraser Institute came out with an excellent report about Canada's aging population. By the way, this applies to the US too, and how this demographic is a drag on Canada's labor market. So essentially, yes, the employment rate is at a historic high, so that's great, but we have an aging population in Canada and the US, in fact, but this study only covers Canada. And so what we need to do is understand that as an aging population, that means that there's more seniors, that means that there's more retirees, and this could be a drag on the economy. And we've also need to ensure that we've got the labor to be there. We've been experiencing this, we've been expecting this, I should say, for for a long time. But what's that book? I think it's called The Pig and the Python or something from, I don't know, the 1990s. So this is really important when we consider whether it's Canada or the US. These immigration policies need to actually be enacted, and we need to have fewer imposed restrictions so that those doors open. So that's where we are a little bit on the Canada side in terms, and US, but that report was just Canadian. So then the RBC report, Demographics, a Powerful Counterforce in Canada's Housing Market Correction. So together with immigration and shrinking households, now listen to this, shrinking households. What? Yes, this is fantastic, interesting information for us. So we are actually not going to be seeing a crash because we've got major demand because households are shrinking. Check this out. So regardless, while immigrants and newcomers to Canada and the US, and this has been this is just a long-term trend, is that newcomers typically live in multi-generational living. What does that mean? More people into, homes, basement suites that families live in, etc. together. However, this report is showing that millennials, and that's what I call those young millennials and the older Gen Zs, that they're actually forming smaller and smaller household sizes. And that means that that's increasing demand, and that's putting upward pressure on rents as well as property prices. So what we've been saying again is long, modest, slow expansionary period for quite some time. Yes, we're going to experience a softening, and I will tell you more about that when we get to the real estate market section. So these are buy and hold signals very positively. Now, this is switching gears a little bit because you asked for it. So a little bit more of a macro view of population. And the World Population Review, this is a live kind of it's a live website. And it just has basically the whole world population. And I'm just going to go over here. This is just the clock. This is where we're at, like 7.9 billion births per day, deaths per day, and the net change per day. So we get a sense of population and what we're seeing in the world. But I'm going to go a little bit step further. Okay, we want to look at, on the right-hand side, is the growth rates. So we've got some growing populations around the world, and growing populations, again, means that there's demand for real estate. Now, if it's babies, of course, they take some time to develop and live in your properties and whatnot, but we still want to have a growing population. So here's some countries that may be of interest to you that you may want to look out for. And Moldova, there you are. That's the highest. I've sorted these by the highest growth rates to the least growth rates. And I think that that's interesting, especially for those of you who are considering international investing beyond US and Canada, because I know lots of you are doing that. You'll want to take a look at those rates. Now, a concern that we have, which is interesting, is actually a potential slowing of population growth. So I just showed you some of those high growth rates, but in fact, there's quite a bit that's not growing. And so, as you guys might be familiar with Elon Musk, everyone, yeah. All right, well, he's pretty smart businessman, pretty savvy, and he was asked recently, and you can see it here, is what is the biggest threat right now to the world and the economy? And his answer is population collapse with a super low birth rate. And I thought that this was really very interesting because everyone's talking about, oh, overpopulation, there's too many people and all the things. But when you start to actually dig into it, birth rates are not actually at the level that they're replacing the human population. And I want us to rewind a little bit to what I just brought up about demographics and the aging population. And aging, yes, typically moves people in towards, unfortunately, like that goes to death. And so as a result, we're going to have more deaths, and we don't have the birth rate to support it. So this is the macro view. And when we start looking at the declining populations around the world, and I just took the bottom ones, the least, I mean, the Ukraine, okay, well, we can appreciate that. But Canada, so I'll tell you about Canada and the US. You might want to be like really mindful of these, like, okay, if you're thinking internationally, you want to have a location where there's more growth than not, because where people are is the economy, is renters, and you name it. So you can go back to that if you'd like, but where are we in Canada and the US? So the average growth rate for Canada is 1.02%. That's 120th in the world in terms of ranking. So that's not very high, but the world percentage is 0.49%. Right now it's at 0.78%, and in 2019 it was 1.32%. So we have a ways to go to make up our difference for even where we were in terms of our growth rate from 2019. So as a result, you can imagine we absolutely need immigration in order to be a sustainable and viable country. And that's also applying to our rental markets. And so I hope that that doesn't sound alarming. I just want to make sure that I'm addressing it. And I'm going to go a little bit deeper. So this is good news. Our growth rate is improving. Fell off the cliff because of immigration closures and things like that. But we can do better, and we actually need to do better. And then moving over to the US, very similar. The average growth rate in the US is 0.51%. That's 162nd. So right now it's only at 0.38%, and in 2019 it's 0.66%. So again, we're not where we need to be. But it's got a huge population, so that's an important part of it. So while the percentages are smaller, the actual, like, this is a percentage growth rate, so it's actually got, in terms of the world percentage of the population, it's got 4.34% of the world population, whereas what did I say Canada was? 0.49% of the world's population. So I'm going to move along here. You can see where the stats are. Again, there's opportunity for the US to do better. And then I want to point out, and I don't want to get political about this, but I want you to be aware of it. So I think it's important. It's all over the headlines about Alberta releasing their top 10 causes of death in 2021. And the data, so this is I don't know if you've seen the headlines, but it's pretty wild. And when we start to think of aging populations and these top 10 causes of death that have significantly changed, we also just want to be mindful. We'll be watching these population and population growth rates very, very closely, because where the people are is where real estate will do well. That's like if of all the leading indicators, people, that's the number one. And yes, people can show up before the jobs and before the economy. And by the way, I forecasted this in 2019. I think I might have this in here already, actually. So I won't. I'll get to that. So what I wanted to show about this, so I actually went in and I got the spreadsheet from the Alberta government. I did not rely on the headlines or some other reporter, and you can see that in 2019, 2020, and 2021, other ill-defined and unknown causes of mortality was 522. Last in 2020 it was 1464, and in 2021 it was 3,362. What is unknown causes of mortality? I just want to, for those of you who want to understand this, we've just got to pay a lot of attention to what's going on. And, are these statistics similar to other provinces and other states and things like this? So for those of you who have asked, I hope I'm addressing it. We'll be watching our population very, very carefully, and including death rates and demographics. So then back to this sort of also, again, the US, the demographic outlook, it's very similar. The size of US population is projected to increase from 35 million in 2022 to 369 million by 2052. So that's good. Like the long-term projections for population growth are out there, but that'll be driven by immigration. What I'm showing you back here with these tables is, okay, if these countries are also not reproducing and not having growth rates, then where's the immigration going to come from? So we want to be mindful at this super global, super macro level. Yeah, so everything will be about immigration right now. That's the only source. So Canada and the US, we have major implications. We definitely will be watching this very closely. And for those of you who kind of get mixed up on the immigration or emigration, it's so easy to do. Emigration is when you leave a country, and immigration is you come into the country. So yeah, and to make it a little lighter, get informed, stay on top of the data and the information. And if you'd like more from me, feel free to reach out to info@realestatewealthlab.com, and I can send details along those lines. And make babies. Ultimately, this is where, there's a real opportunity for the growth rates around the world. So have fun with that, and we'll keep you informed. So populations and growth rates are not where they need to be, but they are still positive. So that's, again, positive pressure on our rents and real estate properties. Interest rates. So who here's been watching TikTok? And interest rates on TikTok, right? I know, Naren, you have. So there's been a lot of chit chat out there about I would call it some misinformation. So I'll walk you through that though. So interest rates are still rising. This is the forecast snapshot for the Bank of Canada overnight rate, as well as the US Federal Reserve, the funds rate, for the 2022, and this is the forecast, remember? So August 5th, we saw everything go up, and then for September, expecting it to go up more, and same in December. So that's the official. This one is from CIBC, but we're also going to go a little bit more. This is kind of we also need to be mindful of this because of the interest rate hikes that and inflation, which I'll get into in a moment. We are seeing insolvencies for businesses jump in Canada. So they're up Q2 2022 about 31% year over year. So whether it's interest rates or all these other challenges, many of the small, medium enterprises didn't have the reserves to continue with the lockdowns and things like that. So that was a challenge. But watch lists, like we're not into an economic collapse, but we do need to be watching for these insolvencies. But then, like I showed you that jobs data for the US, and it's way high. So again, we just want to be mindful of the consequences of, interest rate hikes, how that can impact jobs and employment, but on the other hand, also impacting us and our purchasing power as well. So unusually, again, and like this is where it gets really fun, is because if with the real estate cycle formula, like everything is doing its thing, and it like an indicator here will have an impact on an indicator there, and I think I called that the kids in the bathtub effect, and all water is splashing everywhere, and this is actually like really happening in the US because they had such a high jobs number again consecutively, that actually puts even more pressure on the central banks to raise the interest rates, because the belief is that individuals can tolerate it because the employment is so high. Also, as I've mentioned many times, we'll talk about it again a little bit, is that inflation requires interest rates to rise, usually at or above the actual inflation amount. So if we're looking at inflation of, well, I'll get to it, about like 7%, 8%, then those interest rates need to kind of go with it. So I put this in a, hopefully kind of an easier way to see what I'm talking about. So jobs growth equals like higher interest rates? Yes. So this is based on Milton Friedman plus other sound economic models throughout the years, and job growth puts here's one of the ways that I was talking about with that kids in the bathtub economic effect. So job growth puts upward pressure on rents and property prices. That's good. We want that. Job growth, the forecasts, the interest rate increases, and recession. So it will actually, if we have tons of job growth, then we actually have interest rates go up. That's cool. And then that can mitigate the recession. There will be some form of recession because inflation is where it is. It's the mild recession, the gray recession, whatever that is, but we've got to be watching it really closely. And it's kind of inconclusive right now. It's okay. That's why you're all hanging out with me and the real team right now. So then job growth, though, also puts downward pressure on rents and property prices because of the interest rates that will go up, which also puts downward pressure on rents. And also the recessions typically put downward pressure on rents and property prices. So the great job news for the US, that's way high, which is awesome, but rising interest rates will occur. So again, if you're hearing we're not going to have higher interest rates, it's just not possible. We will be having higher interest rates. So there you go. A little bit of good news, bad news for job gains. And this is applying to the US. We'll watch Canada's employment market really closely. So here's just a snapshot of Canadian interest rates. July went up. August, it's the same. We are expecting, as you saw in that forecast, an increase in September. And the US, there's where their rates in June, and in July they stayed the same. Did I get that right? Oh, sorry, I meant to hide those slides. Here we are. This is where we need to go. In July for the US, interest rates were up, and they are currently the same right now as of August. So we are expecting more rises, more raises, if you will. But here's just a little snapshot on what the current mortgage rates are in the US. So you'll want to take a little bit of a look at these if you're looking for mortgages. So 30-year fixed is up, 15-year fixed is the same rate as last week, and 5-year fixed rates is up 9 from a week ago. So pretty much up or staying flat as we expected. Now, moving along to inflation. To understand and forecast inflation, follow the money. So that's basically how it is. And follow where the money was printed and spent. And so this excess money that was, pumped into the economy around the world, but of course we're talking primarily the US and Canada, is that it leads to inflation. That's just the only answer, and it's right on schedule. It came out, started feeling it in September 2021, and it takes 18 months after the starting of the printing. So as you can tell, they started printing money in March 2020, and they haven't really stopped yet. And that's what we need. We need governments to stop spending money, printing and spending money. So when we look at the CPI, which is one measure of inflation, it doesn't include everything. It's baskets, but whatever, this is what we use. So in the US in June, you can see here that, well, I'll just move over to July because it's the most recent. So for July, it's, I love this, it's 8.5%. Now you may have seen a lot of the headlines. Oh, Mark, are they interest rates for multifamily or single family? Those are for single family. And it really depends also on the actual, product and shopping. So you'll want to shop around for sure for rates, but that's just to give you a sense of what direction they're moving in. Hope that helps. So thanks for asking the question. So where we are, you've probably seen all the headlines of like, oh, inflation is down, inflation is down. Oh my God, let's celebrate. Yes, well, it's still up, it's still growing. It's still 8.5%. So that's not like a material shift from 9.1%. And a lot of, oh yeah, the headlines, right? Has it peaked? Well, do you think it's peaked? Oh, I think I'll get into that. Do you think it's peaked after we've been printing this much money for this long? Well, I don't I don't think so. I don't think so. But we'll find out. Again, this is all just in motion. So skipping to Canada, July, very similar. So June was 8.1, July 7.6. But remember when we hear these headlines about has it peaked? Remember, these are the same individuals who told us that inflation was transitory. Right? It wasn't even going to happen. So yeah, let's take it all with a lot of grains of salt. So this is one of those headlines, you know, has it peaked or whatever. Yeah, speechless. So this peak statement has two assumptions that rate hikes, so interest rate hikes, I should say, have been sufficient to curb inflation. But like I mentioned just moments ago, is that the interest rates have to be like at the same level as inflation. So technically, like we're talking about 8% or more. Can our government do that? Can our, the banks of Canada and federal reserves can do that? Is it going to be a good idea for the economy? I don't know, but what I do know is that the government hasn't stopped printing money and circulating it. And as a result, inflation is on its way still. And I really don't think that we've hit that peak. And so we're going to be seeing this tightening and policy tightening to continue for the foreseeable future. We're also, okay, I'll shift into some politics and policies. So, and I am actually just back to the inflation. Because it will be here for a while and because interest rates will be going up, and we're watching these data for economic recession, it's just it's a good time to just bolster your reserves and hold for the long term. Like just that's kind of where it's at, and be prepared to have opportunities as the market softens over the next 2.5 years. So, you know, make sure you've got capital, start working on your joint venture partners and things like that. Because this is really a great time to actually get in the market, because again, your real estate is protected by inflation. It's one of the best hedges that you can make against inflation, because it typically, real estate outperforms inflation. And that is a good thing. So politics and policies, I'm switching gears a little bit here. This is in Canada. Oh, government policy to lower house prices. Have we been talking about this for like years? Yeah. Okay. All right. So nothing new here. The question by the National Post was, what can governments do to reverse poor policy and permanently increase supply? And I thought this was a very good article because it actually talks, like many of us have been saying for a very long time, is reduce taxes and fees and long-term increased supply would contribute to price moderation. This is about supply. And that's another thing, that because we have such a lack of supply, it's like, what did I say? It was like 1.8 million units that were behind schedule on in Canada. I mean, it's massive. US, same thing, huge numbers. And we wholeheartedly agree. And to quite frankly, dear government, please get out of the way. We need supply and we need it fast. And so this is all about watch lists and seeing where, and this is again, both sides of the borders. We want to, we need to have some creative solutions, and it doesn't have to be that creative. Like I know of a government, I will not say which one, it is a state in the USA. And instead of taking away some of the policies and the permitting nightmares that occur, they're actually adding more staff to that, like to the Department of Planning. Well, that's not, if you can actually get rid of the problem by removing the permit requirements or changing them so that they're faster and easier, rather than, and that's like getting to the root cause of the issue, rather than hiring staff and spending more money to apply, it's just not. So this happens around the world, and there we are. So Canada's tax authority has been on a multi-billion-dollar real estate crackdown. So yeah, Canada is getting squirrely. Canadian government, let's say, is getting a little squirrely because it also knows that property prices and property values are gonna temper the next 2.5 years. Well, guess where they get their money from? property prices, property taxes at the municipal level, et cetera, et cetera. And so at a federal level, they're also looking to find new ways of income, which they always do, because they spend a lot of money. So just be mindful that there will be probably more audits, more people asking questions. So just this is what they're focusing on: property flippers, unreported capital gains, unreported worldwide income, unreported GST and HST, and lifestyle assessments. And I have to tell you, like, what is a lifestyle assessment? Does anyone know? Because I don't. But basically, the government is going to tell you, hey, you know what, your lifestyle, it's like maybe too good to be true, and we're going to make you pay for it. So as we always say at the Real Estate Wealth Lab, and this wonderful group of humans that I love hanging out with, we are always in integrity. We're always doing the best that we can to, you know, use and leverage our professionals, doing our diligence, having our power team, our accountants. Oh my gosh, I have many of them. And so just make sure that we're doing that, and everything should be fine. But it is a bit of a disincentive that, again, the governments are considering more taxes. So rental market, switching gears, up as exactly expected. Like, we should be seeing rents continue to go up for quite some time into the long future here. So up across the board, and here's last month versus, oh, it says June versus August. So there you go. This is where we are now. It's on track, it's upwards, it's in line with the leading indicators. I love seeing these lists change around a little bit, like Vancouver, Burnaby's come down a little bit. Vancouver's still taking the cake. Toronto's moved down to 4th. But anyways, they're all up year over year, huge. Like, look at those like Toronto, Burnaby rents are up year over year, 31.4%. Good thing I have rentals in Burnaby. All right. So then when we look at the US, this is the average rent by year, and very similar. We're seeing it up 20% year over year when you look at the national average. And this is the highest spike on record, and this is as expected, because we started to see leading indicators and GDP and things like this start to shift about a year ago, and rents take about a year to start going, and so far we should see them continue based on current data. Okay, so definitely, you know, as a renter, there's a bit of a fight to stay afloat. Rents are going up. How are they going to afford them, et cetera, et cetera. So fine. How that impacts our real estate prices is that individuals who may have been, and with the higher interest rates, people who may have been wanting to get into buying a property now are being really truly forced into that renting. So again, we're dealing, I'm just going to go down to the bottom here. It's supply and demand, and the gap is tremendous. So we will be seeing rents go up for a very long time. And if you want to read the entire article, I think it was about 2.5 pages in the rentals.ca annual rent report. I think it came out in May. So if you'd like to know more about what I think on supply and what I think on rents, I know that that's in your newsletters as well. So again, just a reminder, rents are lagging indicators, and this is exactly what we've seen. We're going to experience them probably stabilizing a little bit in 2023, 2024, because we're going to be seeing some soft, actually it probably won't be until 2024, but for the long haul, they should be going up. Again, supply is the situation really at hand. Property market. So moving into the property market for Canada, US, Canadian real estate correction is becoming the deepest in half a century, says RBC. All right, the housing correction now runs far and wide across Canada. Housing correction, have you guys seen these headlines? Okay, it's going to be a little bad news and a little good news, so we're all right. Listen, the headlines are suggesting some serious panic. And I love this. Well, what can we get someone to buy next? And like, that was fun, the news, et cetera, et cetera. We are not expecting a drastic fall, and not even technically a crash. we're expecting a soft decline. And this is because we still have, I mean, again, we're going to be watching Canada's job numbers and we're going to be watching the population. But at the moment, we're still seeing overall some growth that's putting legs and upward pressure on rents and on the properties. So what we're seeing here in terms of Canadian home price is set to drop by almost 25% by the end of 2023. Yeah, I got a slide for you, okay? So if you did buy at the very end of 2022 at a peak, for sure, just hold on though. And that's why it's a hold signal. But look at the freaking growth. So like anybody buying out in Moncton or Halifax, those markets, and again, you have to drill into your own neighborhood and details. But Moncton went up 82%. If it goes down by 25%, is it still not up like a lot? Right. Yeah, this is where we don't want to panic. And again, you need to get into your actual specific markets, but like Canada on the whole went up 43%. So if it's going to soften 25%, then again, we're still up, like call it 20% from where we were. So this is all good. And that's just from February 2020. So in other words, if you've been buying previously, you'll just want to keep on holding. And again, you're also going to have inflation. How about Edmonton? Edmonton, 16% increase. So that might be something that we would want to watch, and drill into. Okay, so is Edmonton gonna crash? Well, Edmonton is one of the safest, most stable real estate investments in Canada. It's a government town. It's got tons of diversity. It's doing well for the long haul. So just hold on, Vincent. Why Canada's housing market slump could make affordability even worse. So Tal is CIBC's chief economist, and he's again saying this 25% to reach pre-COVID levels in terms of the decline. Ongoing correction will not solve affordability crisis. So again, when you're up this high, and that's just in a year and a half, basically, coming down 25% isn't changing much in terms of affordability. So there's still a challenge with supply being the problem. So that's ultimately, you can't have a housing crisis if you build more houses. So now what that means for us as real estate investors is that, guess what? They can't build houses overnight. Oh, and construction prices have gone up like a ton. So developers are not wanting to take on as many projects, like they're metering things out. So this isn't going to get solved. It's just, this is going to be a systemic issue for quite some time. And the governments don't have the capability really of working and collaborating together very effectively on this. And from rules perspective, I think it was September and October last year at our research lab, went into all of the ways that the government would have to be able to work together and collaborate at the national level, at the state or the provincial level, and then at the municipal or county or city level. And it's a lot. What's this? I'm seeing something in the chat here. Ron, crystal ball question. After the previous Canadian recession, 2008, 2009 Canadian recession, we bounced back fairly quickly. Do you see this present recession being more elongated? I do. In many ways, the recession that occurred in 2008 and 2009 was fake news. It wasn't actually based on fundamentals. You know what happened in the US and then Canada, our banks were managed differently. So we just kind of got a buffer hit, if you will. The US, it was based on what the banks were doing and how they were being regulated or lack thereof. And as a result, it was fairly quick. This could be longer, and it probably needs to be longer because of where inflation is. And that's just a side effect of inflation is a recession. It's just part of the package. So we didn't have inflation back in 2008, 2009. And then you go on to ask about Metro Vancouver has seen a flood of pre-built sales in the past years. Sure. Do you see buyers inability to finance these translating into fire sale with buyer opportunities. Oh, yeah, that's always a risk of pre-sales. And absolutely, when you buy at a high, and if they do come down, for example, or you can't qualify, that's definitely a challenge. And so there will be opportunities out there for sure. So hope that helps answer your question, Ron. So a new phenomenon, something like a phenomenon. What's that song? Big investors eye Canada's home market. Aha. All right, so now we're going back to this comment that I've made many times about follow the money. And I've mentioned that Blackstone is the largest REIT in the world. And it's setting up offices in Toronto. It's buying up the US. It's buying up Canada. So just be mindful that investors are coming in and they're pretty smart. So you're smart too. So they're getting ready for a buying opportunity. And this is a good thing for you. So even, as I mentioned, real estate is a stable asset, even in times of crisis. And so that's really that's the bottom line of what's going on here. So don't get caught up in the scapegoating and all the weird headlines out there. Just be prudent, be conservative, do your cash flow, make sure you're ready, and you'll be all right. So don't panic. It is a cooling off. It is not a crash. Now, again, we'll be watching the leading economic, all of the leading indicators to confirm, and keep on top of it. Because again, while the jobs are softening in Canada, so that's not great, but there's dozens, like we look at 31 indicators, and they're all, most of them are pointing towards a long-term modest expansionary phase for real estate. Yes, with a softening from now through 2024, and population will matter, for example. So where we are in the July US market is prices are still up double digits. They're selling fast, the days on market. And again, please note, I know that this is the macro section. That's why we do city specific and we go through a market analysis, because obviously there isn't a US market, there isn't a Canadian market, but it gives us clues. It gives us an idea, a flavor of what's going on out there. And that's why I feel that it's very valuable to look at these and then of course go into your own specific neighborhoods. So there is more coming on the market, but still not enough for supply, and construction is down. So again, we've got this like pressures that are upward pressures that are remaining. So I guess, we're at conclusions here. So the validation of a real estate cycle formula, the results are in. It continues to be tried, tested, and true. We are expecting that long, modest expansionary period softening through 2024, and that depth and the length of the impending recession, because yes, there will be a recession, could affect this forecast. So we'll stay tuned, we'll keep you posted, and be prepared. So this is a hold time for sure. And then a couple more things is the headlines are going to say crashing real estate. So just don't freak out, because what you just saw was up 82% in Moncton. So overall down 25%, that's really not a crashing market. So just don't buy into it, because we got to keep our confidence high. And so we are going to be expecting more downward revisions. We're going to be expecting more interest rate. We're going to have affordability challenges. They'll continue. And in the meantime, just remember that inflation is at work, and it is putting upward pressure on your property prices alone. So that is a good news story for inflation with real estate. Again, that lack of supply. We do have an expanding population, but we will be mindful about death rates, about immigration rates, about birth rates, so that we do have a sustainable, go make babies, like I'm telling you, so that we have a sustainable world. I think that's a really interesting and unique perspective. It's the exact opposite of what the world narrative is right now. How many people have heard, overpopulated? Well, if you don't have the births, that's the situation. All right. So there's lots of other indicators that are pushing up. This is now a time, you might want to okay, if you're going to buy, sure, you might want to wait for it to soften a little bit more. That's fine. But for the right property, go for it. Just hold it and bolster yourself. And what I would caution on is some rent to owns and fix and flip just a little bit, because there's some macroeconomic factors that's softening. So listen, I have time to fix and flip wrong. Anybody else? Yeah. And then you just got to hold it and it sucks. So, or rent it out or whatever. So there's always ways and solutions, and you're around the right advisors and coaches to help with that also. Yeah, and agreement for sale might not be the best time to do that right now for selling. Okay, well, that was it for the macro. So thank you very much. Naran, I'll just take a little sip of water.
Yes, that was a lot. So here's what I learned from our first half of our session. Go out and make babies. My real estate portfolio depends on it.
Oh my gosh.
So, I think that's Instagram worthy.
That is actually really fun. I love it. Okay.
What's really important, I think, is that what I'm excited about is that we are all here together at the end of summer, 50 of us, or 50 plus, 51 right now on this call. And it is so important to hear what is going on in real life, in real time. Jennifer, there's a very old principle that is used in psychotherapy, that is used in counseling when I used to counsel. And that is that if you have a client that's going through some hard times, by having them articulate what is going on and creating a picture and seeing reality of what it is, it actually de-venomizes it. And what I'm finding is that there's a lot of conversation going on about real estate. And most of the conversation about real estate out there is conversation about how the market is crashing, the world is ending, the sky is falling. The next moment, we are out of inflation, everything's roses and peaches. So you know what? That type of conversation, when you're around that, when I'm around that, and I'm a pro at this, I still feel the effect, the tug and the pull of it. And so just to come into this room, this place, and look at the factors and be with other like-minded people really helps us to see clearly what is happening in the world today. And by seeing clearly, we get to actually be a place of calm, not just for us, but for others around us. And you touched on something that was really, really important, that over the next year, I think we are going into a huge buying opportunity. And this is the time when we as experts need to talk about the safety of real estate, the future of real estate. And this is the time when we need to start building out our joint venture relationships, because it will actually help people. So anyway, it's just stuff that's going on in my head, and I'm sure that number of you, it's so good to see everybody. I see Dion's in the room, and Nima, you're in the room, and Hugh, Terry's in the room. I'm seeing a whole pile of familiar faces as well.
Yeah, that's awesome.
I actually saw Captain Kirk in the room earlier, and I'm wondering whether that is actually William Shatner or somebody else.
Well, maybe they're interested in real estate and space.
Who knows? Jennifer, you ready to take us on to the next level?
I sure am. And thank you, Naran. I think you touched on some really key highlights there. So thanks for wrapping it up with a little bit of a bow. So that's fantastic. And I guess really to one final word is keep calm. Just stick with getting news updates from here, because we'll hopefully deflate some of that tension, I hope.
Jennifer,
right.
before you continue, I just do want to mention, because of the number of people we have on this call, at the end of this call today, if you're wondering what Rule is all about, and there's a lot of information that's going around, I'm going to take 5 minutes and just highlight a couple things that we offer at Rule. So stick around, and who knows, maybe we'll even open the mics up and have a chat.
Ooh, I like it. Okay. All right, Naran, that sounds good. Okay. Well, market analysis. So as you know, we have just gotten started really, and we've covered a lot. Toronto, Calgary, Vancouver, Honolulu, Maui, like the island the whole island as opposed to a city in it. Miami, Fort Lauderdale, Orlando, Kitchener, Waterloo, Cambridge, Ottawa, Phoenix, Houston, Dallas, Edmonton, Tampa, Cincinnati. Oh my gosh, and more. Then today, that will bring us to, and I should remind you again that we apply the same real estate cycle formula, all those 30 weighted indicators, and we apply them to, now you've heard the macro, we look at now the city specific. So this is again kind of like where we are in this particular real estate cycle. So we always have the expansion period, the stabilization, and the contraction. And there's certain different time frames and whatnot. And it cycles through. It goes through these cycles. And at the top of expansion, I actually recently saw someone else describing their real estate cycle, and they actually had a fourth period in it. And I thought that was really interesting. At expansion, they called it oversupply. And at the very, very, very end of expansion, I wouldn't consider that a phase in and of itself, but it is true. So if you do see this, at the end of an expansionary period, you see cranes and buildings. And it's so cool because I actually watched this happen with a real estate cycle in 2008, 2009, had a condo on the 28th floor in Coquitlam, and I looked out and I was like, wow, building like crazy. And sure enough, that occurred. It went into a contraction phase. So it's just, but I wouldn't consider it a full period. I think it's one of the indicators, it is one of the indicators in here. So we definitely look for it. But anyway, I just kind of wanted to give you that little insight. Well, there we go, I digress. So again, kids in bathtub effect, like all the indicators are doing all kinds of different things. And what we do is we pull them together. First of all, we pull the data, then we pull it together, and then we show you where a particular market is. So we are, thank you, Hugh. This is all about you because you showed up and you asked for it. So this is what happens, ladies and gentlemen, when you show up to the community labs and to other market leaders labs, and I ask, hey, what market do you want? We can do these for you. So, and this is fun. I hadn't really done anything on Atlanta previously, although I've been there. So GDP, what's going on there is, and we start, again, we do this sort of like macro to micro down to the city if we can. So US, the national, the state, Georgia, and in terms of real GDP growth in 2021, the nation, the US was 5.7%. Georgia, 10.4%. That's some seriously favorable GDP activity. All right, picking some winners with some leading economic indicators. Then when we drill down a little bit into the real GDP growth for just Q1 2022, I don't like looking at quarters. I do prefer to look at annual, but that's what's available at the moment. So it's down, but again, because it's down less than the US, that is good. And it was way higher, so the net is definitely a bonus. So again, it's decreasing less than the nation, and that's good. This is, well, GDP going down isn't good. It's okay. Like, it's still better than. And we like to look at that. So look at the percentage change from 2021 versus, and I know you can't really do a whole year stamped against a quarter, but regardless, we're in a really good state of affairs there. So Q1 is not a trend. We'll be watching it very closely. So it's a little too early, but the net positive growth is good. So that's a thumbs up. Hey, do you like these thumbs? Do you like the thumbs up and the thumbs down? Is that helpful? Yeah, okay, cool. I get the double thumbs up from Terry. Thank you very much. Right on. Okay, so when we look into Atlanta specifically, so again, we did the state and we look at real GDP growth. It's declined a little bit, but it's still going in the right direction, and that is what we want to see. I would want to do a little bit deeper. It's hard sometimes to get that city level GDP. As I say, if you're going to go into this, I would recommend doing proxy data. And proxy data is, I've got a series of questions, and it's just like, okay, it's just diligence 101, basically. Like, is the economy doing well? Or is there good confidence in it? Are the politics open and favorable? And based on what I know of Atlanta, and obviously it's doing quite well with the state and whatnot. What I know of Atlanta, it's got a very diverse economy and a lot of head offices. So those are all positive signs that you would want to look into. And when you're picking your neighborhood, also look for places that have that great solid economic activity. So from jobs perspective, Hugh, you should be really happy. These leading indicators are good. The labor force is up, and this is, we're talking about the state, Georgia. Labor force is up, employment is up, unemployment is down, that's a thumbs up, and unemployment rate is down. So this is great data. It's looking like it's doing all of the right things. Way to go to the state of Georgia. And now when we look at Atlanta, a very similar story. It's doing great in terms of its labor force is up. The employment is up. The unemployment is up a little bit. So that's not the greatest. And the unemployment rate is up a little bit. Let me just confirm that I've got that. Actually, yeah, it's gone up a little bit in June. So we want to be mindful of watching that, what's going on in Atlanta. But the employment is still up overall. So that's good news. Oh yeah, and there's a couple of things in here, I'll get to it, that you'll want to look into a little bit further if you're going to invest in Atlanta. So when it comes to the trends, though, when it comes to the unemployment rate, this is from June 2022, the nation was 3.6, the state of Georgia 2.9%, and Atlanta 3.2%. So it's better than the national rate, so that's good. But the state of Georgia is 2.9%. So that means that there's a city in Georgia, or maybe a couple of cities in Georgia, that have better employment activity than Atlanta. So that might be worth kind of finding out. Yeah, so Georgia, again, with the state level, the unemployment rate, job numbers set new records. It's just doing awesome, like crushing it. So this means that you may want to, again, look at what's going on in Georgia. And then when we look at median household, though, holy crap. So when we look at Atlanta, their median household income for 2020 was $73,000 compared to Georgia at 61 and the US at 64. So you're going to have a really different demographic making a lot more money in the county, Fulton County, which is Atlanta. So that's more favorable. That's really good. And you can see, look at this, the percentage change of that from 2016 to 2020, the percentage change went up 27.2%. So very interesting that the unemployment numbers aren't what we were expecting, but in terms of the household income, like somebody is paying some money. So these are good. Some employers, I should say, some employers are paying some money and some big bucks by comparison. And I believe that that is another risk mitigator, certainly to consider. So we map it out and we're doing all right in Atlanta. And now we're going to move to the population. So the people side of it for size as well as growth. So Georgia, the state, 2020, and just 2020, of course, like it went down as we would have expected because of some of the restrictions that were imposed by the government. So that's okay. But the Atlanta, so the city, its growth was 1.55%. So people are moving to Atlanta. It's growing more than the state. It's growing more than the nation. And you want to look, remember, I'm going to reiterate it. People before economics and before jobs for the most part when it comes to having leading indicators. So then we're going to just compare it, as I mentioned, like the US growth rate for 2021, 0.38, Georgia, 0.84, Atlanta, 1.55. Definitely, that is good news. Those are all buy signals. And then popping it on the chart, it's moving up. So inflation, yeah, because actually you want to look at inflation. We should all be looking at inflation all the time. We haven't had to for a number of years, but that's why we've got the real estate cycle formula so that we can track it. And the inflation in June 2022 for the US, for the nation, was 8.5, but Georgia is higher, 11.5%. Now, it's your call if inflation is helpful or hindrance. Why? Because real estate traditionally is one of the best hedges against inflation. So, hey, if you're in the market and inflation's going on and Georgia's got 11.5% inflation, then that could be very beneficial to you. But what it means at the core is that it certainly will be more expensive. Just a second, I see Rob Watson, you're asking, can I ask what the real estate cycle chart represents? Don't think I follow. Could you briefly explain it? And what do those 4 arrows represent? Oh, this. Yeah. Okay, sure. Let's back up. Sorry about that. Cool. So thank you. I think this is really important because remember I said like the kids in the bathtub effect, and like there's 30 plus indicators that go into this formula. And you can see down here, it's got leading indicators. And then most leading indicators like take between 1 to 2 years to have an impact on something. And again, it can be all kinds of crazy. So for example, higher interest rates will bring down inflation about 18 months later, to 2 years. Similarly, the government printing and spending money will impact inflation about 18 months later. And it was exactly on schedule, like completely on schedule. So that's why this particular way of looking at all of these indicators, and this is plot in the background, by the way, this is plotted and they're weighted, and we have a different way of looking at it. So this is very simplified, Robert. I hope that it's just really to keep our minds thinking of, okay, well, if GDP is like so-so, and employment's like okay, so-so, but pretty good, or what did we have? Oh, people, that should actually be wrong. I'm sorry, that is in the wrong spot. People is actually up for Atlanta. My apologies. But regardless, you're seeing that it's kind of moving and shaking. And then down the road, what we see is the lagging indicators, and that is the rental market. So the rental market is usually actually about 1 year, and property prices are about 2 years down the road. Now, what we need to consider is that anything can change at any time. As you see with all of these indicators, you know, a government policy here or whatever there can change anything. And we actually are able to, with the real estate cycle formula, and you know that like the circle that I was showing you with the phases of the contraction, of the stabilization and the expansion, is we can actually fairly accurately, with most fairly accurate information, we're able to see like how long it's going to last. And that's where, like, remember I was saying in terms of 2.5 years down the road, we'll see those construction starts if it's on an expansion phase. And we can actually forecast out like 2 to 10 years even now because of what we're looking at in those leading indicators. So again, we're looking at, and that's why, for example, for the rest of this year and 23 and 24, all of these indicators together, we're going to see some form of softening. Okay, it's a softening though. It's not a fall off the cliff because there's so many other, including the lack of supply, demand, you name it, that are boosting up our, and I'm speaking very generally now, but raising up our rents and our property prices. And so that's how we're able to go, okay, so there's going to be a little softening for a couple of years. Cool. All things considered today. That's why we do this and update it every month, because anything can change at any time. But based on what we've got knowing now, and it looks, and all that together looks like it's going to be a modest increase for at least a decade. That helpful? Yeah, Robert? Okay, Hugh, I'm getting some thumbs up. Yes, okay, good. Awesome. Thank you for asking that question. This is really important. So yes, interactive. All right. So again, back to inflation, it really is your call if you think that it's helpful or not. But now you know it, you've got the data. So there you are. So inflation is going up. Rental market. So with the rental market, rents are actually on, this is Georgia, this is a state. And I thought this was really interesting that rents are in a downward trend from last year. That's not typical. I have not seen that in, like, I'm just surprised. So that was interesting. However, when we turn to the specific market of Atlanta, they're completely bucking the trend. they're way up by comparison. I mean, they're not up like Florida percentages, like 20% or whatever, but year over year, you're looking at some 8-9% rent increases. So that's good news for Atlanta. If you're looking at other places in Georgia, you want to definitely dig into the rents. But again, rents are a lagging indicator. So you're typically not going to be buying or selling, even for that matter, based on your rent data. Like that's a lagging indicator. And yeah, it's good if things are going up, but what you want is all these other leading indicators to be going up like that. And that's when it really, really matters. So this is more also with regard, now switching, sorry, to vacancy rates. So this is the vacancy rates for Georgia. 12.32% is a high vacancy. Like it just is. So definitely would want to look into that. It is improving. That was in 2009. It's definitely improving down to 7.6 in 2022. So, but it was better in 2016. So this is kind of like, it's improving, but a 7.6% vacancy rate that's high. It's high. And with rents dropping in the state, that's also kind of something I would want to look into. Next slide, please. So then the rental vacancy rates in Atlanta. This is for 2021 Q1. So again, kind of looking, and Q2, pardon me. So Georgia, like stable, but Atlanta, wow, like 7.9% for vacancy. And that's higher than the state and it's higher than the national average. So you want to definitely look into it, that the vacancy rates are higher than the comparisons. So pay attention to that. Maybe as you go, for example, because I know you're going looking at this market, maybe when you get into it and you find like certain neighborhoods that this data could get like another layer. So you would want to definitely check into as you do your diligence, those very specific neighborhoods, because again, there's only so much we can cover, but we've got a good city level here. Okay, so then for the property market, I don't have the sales listings or the median days on market. Interesting, Hugh, when you do your diligence, and we can get a contact for you actually of a realtor there who would be able to provide it. This data is only available to individuals in the Realtor Association. So we do have a contact, just didn't get a chance to call that contact prior to this presentation, but we can get it if you need to. But we do have the average sale price, and that's June. Well, it's gone up 25.6% in year over year. So that's all, again, there's some fundamentals that are pushing that up. So that's pretty good. And then when we look at Atlanta, sales price, sales numbers have gone down, but that's pretty standard that we've been seeing less activity and things like this, and also fewer listings. So sales data without the listings is kind of so-so. But what matters is the median price. So there may have been fewer sales, but that could be because of lack of inventory, whatever. It doesn't mean anything necessarily about the market, not when you juxtapose it against how much the properties have increased up 20%. So, well, 19.4, but rounded up. So when it comes to Atlanta, Georgia, based on the economic fundamentals and leading indicators, it shows up as a strong early period of stabilization for the long term. So that's where we are in the cycle, and expecting it to be a kind of, again, notwithstanding some form of potential softening, because we're watching all these other indicators that are coming into play, but it's looking pretty good for the long term. So you'll want to consider some do's and don'ts and cautions and whatnot, but normally like this, in this kind of period, buy and hold, some rent to owns can be doable at this stage in the real estate cycle period. And you can read through those, but do be a little bit more cautious right now on rent to owns and fix and flips and burrs and wholesale things. Oh, I've got that there, good. And wholesale stuff. So why? Because this macroeconomic factors and the softening now through 23, 24, we just need to exercise extra caution. And I don't want anybody to be hung out to dry, having done that once. Ron, you're asking, are rent vacancy rates typically more or less stable in better, more expensive neighborhoods versus less desirable neighborhoods? Better doesn't, it doesn't matter. It really doesn't. I mean, I've had some less, and Moran's got some multifamily and some probably less desirable neighborhoods. I don't know about yours, but mine were so neighborhoods, and they had less desirable tenants maybe, or clients, but their vacancy rates were amazing. Like, it just depends on your target market, your target audience, and your target client. So it can be either way. And I've also had some luxury properties with no vacancies either. So I hope that helps. Just have to do your diligence for sure. And make sure that the property and the neighborhood fit the client. Like, that is one of the biggest challenges. So, okay, so conclusion, we're pulling it up. This is based on everything. It's just, again, soft, but home prices have nowhere to go but up. With this supply, the lack of supply, I should say, with demand, the way it's going, all these other indicators, it really is poised for more upward pressure on real estate for the long term. So just, again, this is a conclusion. It's like buy and hold almost anywhere. Make sure you're doing your diligence, but we've got a long performance ahead of us. And again, this inflation, when it comes to real estate, it is a risk mitigator, and it is one of the most, real estate, I should say, is one of the most stable assets during turbulent times, and also during inflationary times. And guess what? We're still in turbulent times, hey, people? Yeah. And certainly it's kind of a double buy signal. So that's it from my end. Naran.
Well, if you are looking at Atlanta, Georgia, now you got the ammo to get going. So, Hugh, I'm expecting that you will be doing some posts about some buildings in Atlanta, Georgia. That's my expectation. No. So I'm putting him on the spot. Hey, a great presentation, Jennifer, and great to see everybody. Let me take 5 minutes and just go over, highlight a couple things that Rule offers. If you are new to our community, welcome. And if you want to join us, there's you can come in on a 14-day free trial, especially if you have friends or even joint venture partners that are interested in partnering up with you. I will tell you, I have brought in a lot of joint venture capital by inviting my partners to the meetings I attend, because they don't want to do the work, but they want to know that you're in the space where you are growing. So this is a great time for you to invite your friends and relatives and even your enemies. How's that? Let's go to the next slide, Jennifer. I'm just trying to get okay. Yeah, this slide here is amazing because it will show you one of the things that we at Rule offer. We will offer you quick facts about what is going on at a specific time in the market. This is really great information. It just, within 5 minutes, you can appear to be a real, know what's going on. The other thing that we do is we really summarize the headlines for you. And Jennifer, this is something that you do really well. There's a lot of headlines out there. And so what we will do for you is that we will actually highlight certain headlines that the market is talking about, that is being pushed out there by the media, but we will not just highlight it. We will actually give you our spin on it and what it means. In other words, we'll make it intelligent. We'll give you wisdom from it. The one of the things that if you are a new investor starting off, we also offer what's called the Rule Book. And so that is, Wendy, my Who is a pro at this. She's a real estate investment advisor. She and I will do a coach and teach a couple sessions on how to get started in real estate. This is for you if you're a newbie or you just want to get re-presence to what is going on and how you're doing your real estate investing. Now, we are ending that, but a new session will be starting up. So reach out to Paige if you need more information on that. So, like I said, we have beginners. You don't know how to get started? We've got you. If you are an experienced real estate investor, and I can see a few of you in this room that are experienced, here's what happens to all of us. We all get this place where we get stuck, and we need to get into another room or get exposed to a way of thinking that will get us unstuck. This is a great place to be. Whether you need to get unstuck on your business end of your real estate investment process, or it is just on the real estate itself. Now, some of you in here, if you are not there, you will get there where you will become next level, where you've got capital lined up, you've got money coming in, and what you need is access to deals or strategies to scale up. If you're in any of these three categories, we've got you covered. Especially on the last one, on the next level, one of the things that we do is we actually bring you deals that we think are half decent and good. And so it's a great place if you're looking to either, you may be exiting a portfolio, you want to put your deal in front of other investors who understand the market, and you have a good deal, this is a great place to place it. Or you may be looking to buy a good deal. This is a great place to come because we will have properties in there that our team has vetted and looked at. Now, you still need to do your own due diligence, but it's past our filtration system where we go, this is worth a good, strong look. For industry professionals, maybe you are a realtor, mortgage agent, you may be a coach or somebody who is a joint venture specialist. You may be looking at bringing capital. We have at $9 a month, you will get a members only intelligent newsletter. You will get Property Shop and a few of these items. It will really, really help you to scale up. For beginners, our pricing starts at $19 an hour. And where else do you get to go and hang out and learn stuff like this at $19 an hour? Now, if you want to add a coaching element to that, then it's $49 a month. And you can stop anytime. If you say, forget this, I want it all. I want everything that you've got to offer, $99 a month. And we've got you covered. Jennifer, can you go back to that slide with the leaders, with our executive team? I want to point something out here. We have a really wide base of leaders who are experts in different fields. And that's one of the strengths of our company. We don't have two people that are real estate investors, and that's it. We have a wide base, and each of us are specialized in specific areas. Ken, for example, is a whiz at operations. He will take a look at a process and go, oh, this is how you simplify, this is how you operationalize it, this is how you systematize it. Now, he's not here with us today because it is his birthday today. So happy birthday, Ken. So anyway, I just want to highlight that because you're only as smart as the room that you're in, as the people that you surround yourself with. And I am so impressed with our leadership team because of the capacity that they have in different aspects of real estate and business. So, Jennifer, I think that about sums it up. Hold on, go back to one slide for me, Jennifer. If you want to take a screenshot of this, feel free to do that, because even if you're already a member, it will tell you what level you're at and what you have access to. It's just neat, clean, and tidy. If you have any questions, please reach out to us. Jennifer, what do you think about opening up the room for just a chat?
I think that's a great idea.
If you want to hang out, hey, I'll hang out with you guys for a few more minutes. Let's do it.
Right on. So who's got questions?
Who's got questions? Who's got comments? Put your hand up or anything like that, and we'll unmute you, bring you into the room, and have a chat. Lester Singh is in the room. I just noticed that. Lester, good to see you, buddy.
Vanessa.
No, we're all good.
Captain Kirk. So did I scare anybody off with the population stuff? Or do you want more of that? Terry, you can unmute. Can you unmute? I see your mouth moving. Are we able to have? Oh, there you go. Okay, now I can hear you.
I really like the population stuff. I missed some of it because I couldn't get on Zoom. I now have redone my Zoom so I can get on it all the time now.
Okay.
I need to upgrade. I need to upgrade. So I was very sad to be 25 minutes late when you're talking population because I really enjoyed that.
Okay. Well, thank you, Terry. Well, we'll get to the replay for sure. You can get it in the member portal, and if that is something that is of value to you, and I can keep track of some of those stats and that just different perspectives on population, so that we can be planning ahead. Okay.
Because the push I get from everybody all the time is, oh, there's too many people in the world. That's not true, but that seems to be that. I don't know what they're trying to do. Eliminate the population that's already less than we could be.
Right.
Thank you.
Yeah, no, that makes it's interesting that the narrative has gone that way, and actually in that interview with Elon Musk, it was very interesting that, I mean, for him to say that like that's one of the biggest problems is the potential collapse of the population, and it really comes down to that birth rate. So, and if everyone's aging, there's going to be so it's just a weird it's a really weird conversation, especially when we think about being real estate investors, and people are our clients. I think it's important for us to watch it, and I know many of you have asked it and said, hey, you know what, like, is there something else that we need to be watching here? And yeah, it's a little uncomfortable and awkward, of course, but I'll keep you posted.
Thank you.
Thanks, Terry. Hey, Vincent, I've got a question for you. But actually, before I get to Vincent, I'm just going to come on into the conversation, Vincent. I got a question for you. I'll ask the question and then give you a few minutes to think about the answer. And I'm going to just talk to Jennifer for a second. All right, Vincent. You know, I was looking at Edmonton numbers, and I believe, Jennifer, on your slide, it had something like maybe 17% increase for the last 2 years. Well, so you know, the increase was lower than, say, 80% or 60% or 49%, like in 48%, I think, in Toronto, Kitchener, Waterloo, Cambridge. So, Vincent, are you concerned? I know that you invest in Edmonton or Calgary, right? You're in that neck of the woods, where the mosquitoes are huge and the ice, and the snow is massive. So I'm wondering, from your perspective, what concerns are you seeing in real time right now that you're battling with? So while you're thinking about that, I just want to, are you ready to go for it?
Yeah, I'm ready to go.
Let's go. Come on, Vincent.
Well, first of all, we love winter because it kills all the mosquitoes, and we start off fresh every year. So
terrible.
Exactly. But let me start with, actually, I'm not that concerned about the Edmonton market. So 16% is modest growth compared to when you see stuff like 80%. If there's a correction, it's a smaller correction. It's a more stabilized, I think, local economy. And Jen's right. We have the government here. We're the capital city. So I'm very much okay with where Edmonton's at and how it progresses. We're usually a year and a half behind Calgary, usually a year. So what happens in Calgary affects Edmonton, which is 3 hours down the road, but a year later. There's a lot of market trends, but right now, personally, we're looking at 5 multifamily properties, like I mentioned last time, to pick up because the deals per door and the numbers just make a lot of sense with the amount of technology investments, innovation that's happening in Alberta. A lot of large businesses coming to Calgary. A lot of people moving from Toronto and Vancouver, which is slightly overpriced, coming into Alberta, especially with the investment dollars. I'm not really worried about Edmonton. It's a great buying opportunity for us. Like any market, you're going to have the ebbs and flows. But if you're in it for the long haul, which I was saying on the comments, it's still buy opportunity, buy and hold for sure. We're in it for the long haul, right? So great. I was just doing numbers with an investor, joint partner yesterday, and I said, hey, you know what? Those 5 multifamily properties that's 100 doors. On 100 doors, if you look at, let's say the property goes up, each door goes up by 10, 20 grand per door, even in 10 years or 20 years, what do you think that means for the investor group? And they're like, holy geez, that's a lot. I'm like, yeah. And with the latest CMHC MLI Select program, which is 95% loan to value with 50-year amortization, your money's cheap. So with all those different economics I'm looking at and the indicator, and when Jen did it, it was a buy in Edmonton, buy and hold. You look at all that research, you look at the numbers, we're still affordable. If you look at our premier, he's advertising Alberta as affordable, and jobs just keep increasing here. So definitely a buy, not worried about Edmonton. It's a very attractive place. Joint venture partners, always around to do that. So yeah. It's great.
Vincent, you're still in the room and you're not out putting in another offer.
There's a lot of off-market, a lot of opportunities, but definitely signal here.
There really are a lot of opportunities that are even coming my way, and it's just there's a lot of, like, if you have the right contacts and you're able to see clearly through the fog, you can actually come up with really great projects and properties.
Absolutely. Filter through it, though. That's the big thing. There's a lot of opportunities, but filter through it. Look through all the different indicators. Do your research. Connect. And the team's the biggest thing. Please don't do this on your own. Get a team of experts together to do the analysis, right? And to vet your numbers. That's probably the biggest thing.
Well said. And I agree, Vincent. I just want to piggyback on that. And then I see a bunch of questions. Dee, we'll get to you, and Q and Ron got you in the chat. Don't worry, we'll get to you. But I want to piggyback on that is that when we see markets, I don't want to like diss on any markets, okay? But I'm just going to let you know that traditionally anyway, like you saw that the biggest swings were like Moncton and like 82% or whatever. And in the Maritimes, and I am a Maritimer, okay? I know many of you know that. I'm from Nova Scotia. I'm probably related to like everybody there because I have such a big family. My grandmother was from 21 children. Yeah. And my dad, 9. So like, you know, So I love Nova Scotia. However, you just need to be mindful of their economic swings, and their GDP, which is a leading indicator, is typically just more volatile. And that can be great for some people, but if you don't want that volatility, then getting, you know, a nice stable market like Edmonton that doesn't go through the major swings is also a very good thing to do. And on top of that, one more thing to add to your math, Vincent, is that in behind the scenes, okay, sure, so 16%, you know, that's still good appreciation, but where you make your most money in real estate is actually in the mortgage buy down. So like appreciation is good, but you're actually making your wealth in having the mortgage and buying it down over time. So that's a little thought on that. May I ask, Dee was asking for, may I switch gears to some of these questions? Cool.
Absolutely.
Okay.
Go for it.
Cool. Dee, you were asking any tips on buying US property for first-time buyer from Canada. 1,000 frickin' %. And in fact, I highly recommend that you come to our community labs. And what we'll be doing is one of the topics that was one of the highly rated in terms of votes by you in the community is actually US real estate investing. Not just, I should say, international real estate investing. We're not going to just talk about the US, but I've been investing in the US as a Canadian since 2010, I think. So yeah, lots of tips. The number of accountants you need is probably the number one tip. You need, I'll give you a little tip. So you need your Canadian accountant, you need a cross-border accountant, and you need a US accountant in the county in which you're buying, like in the city or the county in which you're buying, not even like just in the state or whatever, because their counties have different taxes. So hopefully that's helpful, Dee. Let's see, Hugh, glad you like the population stuff. We'll be watching it. Ron, have you ever analyzed Winnipeg? What are your thoughts? Oh, yeah, I have. It didn't make the cut when I analyzed it. I also looked into it as a real estate investor years ago, like when I first started out, because it's cheap. And I just heard, personally, I just heard horror stories. Just, I don't know why. So it's just not something that appeals to me. But when this is now going back probably, I don't know, 3-4 years ago, I'm digging deep here. There was something that I found really lacking in it. And one of it, I think, was something along the lines of the infrastructure and some of the challenges there, or lack thereof. And that was published, actually. That data was sent to a journalist and it was published. And so it's never made any of my top lists, but that's what I think of. Winnipeg's a lovely place. I have been to it, absolutely. So it's just in terms of, with analyzing and ranking, it's never made any of my lists. Dee, you say you're worried about, and feel free to talk, guys, if you want to. So Dee, you're saying, I'm worried about buying and then not being able to find tenants or lose tenants and being stuck with paying the mortgage on my own. I'm not sure about small cities in the USA. Would you consider buying outside of the big cities? If so, what would be your criteria? Thank you in advance. All right. Well, yeah, so we definitely something you want to consider about big cities or smaller cities. What's our rule of thumb? It's about 70,000 people or more is typically like the smallest that I would go to. At 50,000 people or less, the banks, and I think that this applies in the US, although I haven't tried to get a mortgage for a small town USA, but I would imagine that it would be something similar to in Canada, where at 50,000 or less, banks typically don't want to finance that, or it just comes with some snags. So hopefully that answers. And about losing or being stuck. Hey, Naren, do you want to talk about holding on to tenants? I mean, maybe that's a property management question that could be in one of the community lab masterminds.
We definitely could do it in one of our masterminds. So I'm not, you are way more familiar, Jennifer, with the US market than I am, because I invest heavily in Canada. I do know that here, I'm not looking to buy properties in small places. I want the big metropolitan, or, I'm investing in Kitchener, Waterloo, Cambridge. And if I was going to consider a smaller town, I would want that to be a commuter town to a big city that attracts a certain demographic. Like, for example, in Cambridge, I have a property just off Town Line Road. And I know that most of the people that live there, they will work in Toronto, and it's just 2 minutes off the 401. And I know I get nurses there, I get firefighters there. That's my tenant profile. With regard to keeping tenants, I actually prefer tenant turnover over keeping tenants, because when it's kind of a balancing act. Because if you have too much turnover, then it costs you. But every 2 to 3 years to have a tenant turnover is actually, I find, really jives really well, because what happens is now I get to reset my market rent. And when that rental increase goes up, then I get to refinance the property at a better value, or cash flows much better for me. when I'm thinking of one property. In fact, somebody was talking to me about it today. I have had a tenant there for 10 years, and I think they're paying $14.50 in rent. I would never get rid of them because they're amazing tenants. But I also know that property will rent for $2,900 if I was to turn it over. Right. But at the end of the day, I'm looking at providing good housing. And I have no problem keeping tenants. And I actually prefer every 2 to 3 years to have a tenant turnover.
Very cool. I hope that helps answer your question, Dee, about tenant maintenance, if you will. Client care. There you go. Client care is what I was trying to say. I see that there's another question in here. Robert, you're asking about, so between Calgary and Edmonton, which Edmonton seems more stable than Calgary, but how about the communities in between along the corridor there, the commuter corridor between Edmonton and Calgary? And Red Deer, yeah. What's that?
That's a great question.
Yes. Why do you think it's a great question?
Because most people think in terms of Edmonton, Calgary, but very few people stop and go, what about the commuter, the
Yeah.
The
highway in between.
Corridor. Yeah.
Exactly.
So what do you think about that? You're in the neck of the woods.
So personally, I would stay away from Red Deer, but where I would go though, and it's actually proven, is just on the outliers of Edmonton and Calgary. So you got Airdrie, in Edmonton, you got Leduc. And when you start looking at Leduc, it has the airport. Amazon just built a massive warehouse there. Like we're getting a lot of infrastructure, St. Albert, Sherwood Park, like just on the outskirts. And it's definitely like the ripple effect, right? So when we talk about it, you drop the marble, you look at everything on the outskirts, and the outskirts are booming, right?
Yeah.
A lot of
Fort
people.
Saskatchewan in Edmonton.
Oh yeah.
I know that's crazy that it's called Fort Saskatchewan in Edmonton or near Edmonton,
Exactly.
but it's doing really well also. Sorry to interrupt.
No, absolutely. So I would go on the outskirts of the major city, but I wouldn't go towards, like, for example, Red Deer. When you look at Grand Prairie, it's very volatile. It goes up and down, and it had some of the worst years as well, where people, almost went bankrupt, right? So, and it fluctuates a lot. So I'm more about stability, growth. On the outskirts, great deals. You could get some real nice property. And EIA, which is Edmonton Airport, is just booming. They got massive customers, commercial. So yeah, look, even in Calgary, look at Airdrie. Airdrie's just booming. It just keep going past a bit. But I wouldn't go right in the middle, Red Deer, because honestly, people just drive through it.
Yeah, I concur with that. Cochrane, all good. Hopefully that helps.
Jennifer, while you're looking up or other people are commenting and asking questions, one of the things that's been rattling around in the back of my noggin here is that when you talked about population decrease, if that's happening worldwide, then immigration for Canada, just purely from an investor perspective, immigration to Canada becomes key. So then that leads me to ask another question. Leads me to ask the question, well, what kind of country do we need to be to attract the resources called people into our country? Like, how do we need to show up? And what kind of land or what kind of country do we want to fashion? And these are questions that I think as sophisticated investors and leaders within our community, we need to be asking and leaning into.
And getting involved in politics, my friend. Can I add to something that is really important to what you're saying? So in January 2019, you remember this thing called the COVID-19 little dot in December 2019? And so it was, January 2020. Yeah. Before the COVID-19 thing became a big situation. I forecasted, obviously I couldn't forecast like the impact on GDP, etc., and what was actually going to transpire, but I did my best abilities. So the conclusion of this like 30-page report and really getting into what could be the outcomes circles back to what you were just saying, Naran. And I believed that Canada would have handled, theoretically, given the wonderful country that Canada was, yes, I just used past tense, that Canada would attract international investors like significantly once this sort of like all like died down. Now, my conclusions were and are completely accurate, however, with one caveat. And yes, they are choosing to go where there is more freedom. That's where people are going. And Florida is on friggin' fire. And Florida is the freest place in all of North America. Maybe with the exception of some places in Mexico, okay, whatever. But, and actually, fuck. Oops. I'm sorry about that. I swore.
This Mexico, is totally unscripted.
Yeah, totally. Mexico's real estate is going through the roof because people are moving to Mexico because guess what? It's free. So I ran back to the country that Canada wants or needs to be in order to attract immigration. We have had the highest emigration of Canadians, like as in Canadians leaving Canada in December months ever on record. So we're not even holding the people. They're moving to Florida.
Absolutely. Absolutely.
So great question, and it is loaded.
It's true. It's very political, but it's how our government reacted, right? And unfortunately, it gets political really quick. So yeah. Go ahead, Naran.
Sorry, hold on, Vincent. I know it gets political really quick, but here's the thing. We're all like, when I look into our room of people here, we're not just in it to make money as real estate investors. We are people that have an entrepreneurial edge that want to influence and create a better tomorrow. Like every single real estate investor that I have spoken to that has any type of chutzpah to them and has a few properties under them, or they're hungry. There's a drive that pushes you. So when I look at that, we've got to lean. We've been taught, culturally conditioned to not talk about money, to not talk about politics, and to not talk about religion. Well, guess what?
Sex, and I told everybody to go make babies.
I know. This is
so
why
I guess today's the day.
Yes. But here's the thing. Those three areas are where the conversation around values are crystallized. And if anybody is going to create a better tomorrow, some of those leaders have to come out of this room, because we're engaged in the conversation around money and value. And so the question I ask is, look, I can lean into the political, I can go into the political arena, or I can lean to all different areas, but mine is just one voice. The other question I have to ask is, how am I going to create real estate properties that are going to attract the best immigrants from other countries to come to Canada? And I'm speaking, listen, I immigrated to Canada from a war-torn country at the age of 18. I came first at 7, went back all my teenage years. I lived in Sri Lanka. So I get the refugee status. I get the immigration. I get that. I'm a product out of that. So I think there's a conversation that real estate investors need to lean into that we're being hushed and told not to, but we need to get into it.
And
I'll shut up
thank you, Naran. I really appreciate it. And thank you everybody here for your opening and your listening and your, just holding the space for this conversation. And I was very nervous and tentative to put in those kinds of population conversations because there's a whole nother layer. And I know many of you have been asking me of, okay, well, let's talk about the death rate. Is it increasing? What's going to happen then? What's it increasing from? I don't know, but I sure tried to dig into that, data from Alberta. It seems really weird to me, really weird. From 522 unknown deaths to 3,400 unknown. No. Somebody knows. I'm just not classifying shit. It's not right. So
yeah, there's back and forth going on already. But I got to say one thing. If you're in this room and based on what you said, Grant, about investors and trying to do the best and all this, you're all trying to make a big difference. That's why you're in this room right now. When you talk about policy, we try to do our best to influence policy and to create a safe space. I think the first thing that comes in mind, and it was just published in the journal or whatever it was yesterday, I was reading, and it was from an immigrant. They come qualified. They had jobs, they come qualified. The problem is when they set foot here, they end up driving, no offense, Uber, or taking jobs that aren't as, qualified, like a doctor or a lawyer, whatever they were in, where they came from. They said they struggled since 2018 is what the article said. And they said, if I had to choose again, I wouldn't even pick coming here, because they've struggled mightily. Now that's because when they see Canada, they see freedom, they see opportunity, but when they come here, they struggle mighty. And the government's not helping them out. So I'm hearing a lot saying, hey, we want to, then just open the door and let them, right? Do equivalency exams. Like there's so much you could do before they even come in. So
yeah, like equivalency for professionals would be a great start. I don't know if you guys know this, but many doctors who come from abroad and come to Canada, they are not given an option to take an equivalency test. They have to go back to doctorate school. Like it's nuts. That's not okay.
Our healthcare systems are hurting. We need so many people, like nurses are burnt out, doctors burnt out, you name it. So we have professionals coming in, but they can't even work with us, right? So, there's a lot the country can do. We need some refreshed leadership, some better policies to help everyone.
It's just weird, but I've actually been asked to run for prime minister.
Got my vote without hesitation.
Jennifer, if you're running for prime minister, can I be your chief of security?
Yes. 100%. And your dog. Please.
Well, any other questions or comments, or we should maybe...
Yeah, Jennifer for PM.
I'm just looking through here to see if there was anything that we're missing. So looks like it. Anything else, anyone? Oh, Hugh.
I think it's not really a question, but it's more of an anecdote, because like Naran, I'm a first generation immigrant. I came to this country with nothing. And so, it's possible to make things happen. But when I first got here, I found it was a closed shop mentality. Like you couldn't get into a profession, you couldn't get into a certain line of work. It was off limits. And my reaction was, what do these people actually do? Like it just didn't seem like they actually got stuff done. But eventually I found a way to do it, and actually sort of expanded my professional network, to go to the US and get some stuff from the US, and kind of came back to Canada that way. So just want to say, everyone, there is opportunity there. You can make it happen. Don't get discouraged. Never get discouraged.
Absolutely. And this is coming from a guy with a 1993 Mustang GT on the back of his wall there, right?
87, but yeah.
87.
Yes.
The box body. I see it.
Yeah, I used to have two of them. So
me too. There you go.
I'll be buying another one in the next 18 months. So
yeah, love it.
Along with your multifamily apartment building, Hugh.
Yes, we need to talk about that. I need to get that going. Yeah.
Right on.
Thank
you. Okay. Yeah, and let's try and stay positive and optimistic, but also realistic. Keeping on top of some of these trends. Awesome. Okay, well, Gabe, oh, go on.
No, I was just going to say good night to everybody.
Absolutely.
So what's next Wednesday? Oh, that's our week off. Okay. So then now I'm confused. When is our next event?
I might have missed that slide even.
I had it. I just now forget what it was.
September 15th. There you go.
Yeah. That's right. We actually have 2 weeks off because it's the 31st. And then, because this is one of those months where there's 5 Wednesdays.
Absolutely.
So
In those
So-
2 weeks, if you need anything, just reach out to us.
We're here
Yeah.
to see.
And thank you, team, for saying September 14th. Market Leaders Lab. Awesome. Thank you, everyone.
Thanks, everyone.
Have,
Have a great
wonderful evening.
Have a
Thanks for
great night.
joining us.
night.
Thank you.
Bye.